You're watching Traders Morning Setups with Dex the Algo Capitalist. Dex created his pulse wave price trigger reports over 2 decades ago, and he's been using them to ride the pulse waves as a full-time trader ever since. Find out more about Dex's reports and sign up for our next webinar to learn how to use them at pulsewavetrading.com.
Good morning, everybody. Hopefully you had a good night's sleep and all that jazz and that you're ready for today. A little late start this morning, but you know what they say, better late than never. Looking at the overnight markets, well, like we always like to do, we can see here that first things first, the US dollar is finally starting to cool off a bit here. It's down 28 pips, and we're currently trading at 103.86. Looking at the euro, it's up 9 pips at 107.82. Pound sterling up 6 pips at 125.69. And the Aussie dollar is up 23 pips at 65.79. The Bitcoin futures is down 445, trading at 43,770. The Ethereum futures are up half a point at 22.76 even. Crude oil futures are up 95 cents per barrel, trading at $70.33 per barrel. Nat gas is pretty much flat, trading at $2.56. We have gold futures up 80 cents per ounce, trading at $2,048.70 per ounce. Silver down a nickel, trading at $24.17 per ounce. Copper is up 5 at $3.78. We have the Dow futures up 20 points at 36,132. E-mini S&P 500 futures up 18 at 45.74. E-mini NASDAQ 100 up 115 at 15,930 and a quarter. Russell futures up 1.3 points at 1856.2. And soybean futures up a whopping 8 cents, trading at $13.04 per bushel. Corn up 2 cents at $4.86 per bushel. And wheat is down a penny at $6.31 per bushel. Everything that glitters is not gold. And we're going to talk about what's going on in these gold markets. And that this may have an effect on the current gold futures price. But first, let's take a look at our morning setups to see if there's anything developing. Starting at the top of the list with the US dollar, and we'll be scanning our way downwards down the list here. So far, no setups, no setups, no setups, no setups. Still nothing. Nothing there. And nothing there. And nope, no 2-bar Charlie setups so far for this morning. However, if you are a subscriber to the Pulse Wave Reports, you would have noticed that we have a couple of things going on in these markets. You would know that currently, despite all the back and forth, the Dow futures, S&P 500 futures, NASDAQ 100 futures, they're all in a bull market on the algo charts. The Russell, however, is still in a bear market in the algo charts, but it's been trying to work its way out of it because it's in a bear market correction. All right, it's been in rally mode off of the lows. Also, silver is in a bull market, but it's officially starting the correction process. All right. And I'm expecting a technical bounce either by the end of the day or starting in the night session going into Friday. Same thing with gold. Gold is also in the beginning stages of a correction, but I'm expecting some kind of technical bounce. If not, like I said, by the end of today, then they'll probably start an overnight market and bleed into Friday. So that's what I'm expecting there. It's a little bit of a consolidation. And as far as oil is concerned, it's in an official bear market on the algo charts with locked in bearish trend momentum readings. All right. So this one we're expecting to continue to head lower. Very interesting turn of events. And with the dollar now trying to change its course, just remember the dollar is still in a bull market on the algo charts. It's just in a bull market correction. All right. Now, all things being equal, the US dollar index could threaten to drop below par. We have a key support level. Key support. I cannot stress how key this support is. All right, there's a zone 99.42 to 99.55. If that support zone fails, then you will see a precipitous drop in the value of the US dollar index. All right. The goal is to keep it above par. The US dollar has a hard time staying above par, but it's managed to do so for a pretty good amount of time, a couple of months, So we'll see if this trend continues, or is it going to lose some steam? Now, one thing you should note is that even though it's in a bull market correction, you actually have a bullish trend momentum reading. And that suggests that any pullback that we're seeing is and will most likely be short lived. All right. Just a little bit of FYI there for you as we go now into our market overviews. But before we do the market overviews, we got to pay some bills. So let's go ahead and hear a word from our sponsor. Alert, alert, alert. We have what must be a mistake on our website. I am seeing that the Pulse Wave Price Trigger Reports Pro membership is available for just $888 a year. Obviously, I'm firing all my people and calling the police. But before I do that, maybe you want to go and grab one. Get yourself the best yearly subscription price we have ever had on our website. This sale smells like it is about to expire. So grab a slice of that sale price cheese before Frank fixes his mistake. PulseWaveTrading.com. See if you can get there before we put it back to a reasonable price. PulseWaveTrading.com. All right, so in markets, hedge funds' November report cards are in. So very interesting to see how they've been doing. In tech news, Google's next step in its battle with OpenAI over AI supremacy. And in business news, homeowners have a hidden fortune. They just need to look at their roof. But first, the open illusion. It's not a lie if you believe it. George Costanza, OpenAI employees. OpenAI employees threatened to quit during Sam Altman's ouster was the type of loyalty workers rarely show toward a boss. In reality, it was a bit of a bluff. While the entire company signed a letter stating that they'd allow Altman to Microsoft if he wasn't reinstated, no one really wanted to do it. Current and former OpenAI staffers told the Business Insider's Callie Hayes, Ashley Stewart, and Darius Rufian. It's not just OpenAI employees who were bending the truth. Microsoft viewed hiring OpenAI's employees as an absolute last resort, according to insiders. Part of OpenAI's employees' issue with joining Microsoft was the less than stellar impression they had of working for so-called legacy tech. OpenAI staffers see themselves as innovators who are radically changing the world, a former employee of the startup told BI. But the real problem was money, as it often is the case. A tender offer was right around the corner, giving employees a chance to make a fortune selling existing vested equity to outside investors. The walkout would have spoiled those plans. Now, the news of OpenAI's employees' bluff is the last crack in the Altman facade. In the wake of Altman's ouster turned return drama, there was plenty of speculation about the perceived power he now held. When news of his return broke, it was suggested that he was now arguably one of the most untouchable executives in the world. Top flight security of the world, Craig. But as BI's Alistair Barr pointed out, Altman's public statements in the wake of his return to OpenAI tell a different story. He was adamant OpenAI will be totally fine without me, adding that its leadership team is clearly ready to run the company without him. That sentiment, coupled with the revelation that OpenAI employees didn't truly have unwavering support for Altman, paints the past few weeks' events in a very different light. The OpenAI drama also forced companies to make sure they aren't solely relying on the startup, according to Alistair. The timing isn't ideal for OpenAI as big tech companies get more aggressive with AI rollouts. All that's to say, OpenAI employees might have successfully pulled off a massive bluff, but the rest of the industry now knows their tale. A key behind the scenes role at BlackRock is being reimagined. CEO Larry Fink's chief of staff is a powerful post at the world's largest money manager, but rising expectations led the firm to make it a permanent role and tap longtime executive Stacy Mullen for the position. 8 tech stocks to bet on in 2024. Wedbush analyst Dan Ives makes the case for the tech sector posting monster gains next year, from Zscaler to Palantir. Very interesting choice on the Palantir. Google is finally launching Gemini, its biggest shot at OpenAI. The generative AI model will be launched in phases, and it's the search giant's opportunity to thwart the narrative that it's fallen behind its rivals like OpenAI. The new Silicon Valley mantra, it's moved away from Mark Zuckerberg's move fast and break things. Now the new saying from OpenAI CEO Sam Altman starts with move faster. Slowness anywhere justifies slowness everywhere. Block CEO Jack Dorsey finally addresses layoff of Tidal staff. The music streamer just cut 40 employees, and it's likely just the beginning, according to an internal note sent by Dorsey. He also said in the memo that Block is looking to get on a more sustainable financial path. The next lucrative side hustle, selling electricity to your neighbors. New technologies and a fleet of startups are allowing people to not just independently power their homes with solar, but also store and sell excess solar power to their neighbors. I cannot believe that they are allowing people to do that. So they don't want you to collect rainwater, but you can sell electricity from your solar panel. Interesting. Self-checkout theft is a bigger problem than you may have thought. It's increasingly clear that the machines lead to an increase in shoplifting. Now, new data reveals more precisely how big of a hit retailers take from skipped scans. The hottest housing markets of 2024, the top metros, were based on factors like changes in existing home sales and existing home median sale prices. This landed areas like Bakersfield, California, and Rochester, New York, in the top 10 housing markets for next year. In other news, Kevin McCarthy's running Congress will end, capping off Young Guns' era of chaos and disorder. McDonald's unveiled the menu for a Cosmix, a beverage-focused concept that could compete with Starbucks. I doubt it. Jamie Dimon says he's deeply opposed to crypto and the government should close it down. Is that because he lost a fortune because he didn't take profit in the Bitcoin when it hit the 60,000 range and rode it all the way down to where it is now. Yeah. George Santos makes more on Cameo in 40 hours than he did in his entire time in Congress. Sean Diddy Combs participated in gang rape of high schooler, new lawsuit alleges. Bill Ackman wants Harvard, MIT, and UPenn's presidents to resign in disgrace. Millionaires are flocking back to New York City as people make less than $172,000 a year move out. Apple regains a $3 trillion market cap. It is on track to end the year as the world's most valuable company for the fifth time in a row. A boomer grandma felt obliged to babysit her grandkids. She wanted her life back and stopped doing it. Talk about the breakdown of the American family. How the NCAA's revolutionary proposal to pay players could be a huge win for women athletes. The risk of taking supplements for longevity from bleeding to kidney failure. And a look at what's happening today. The Game Awards for video games is tonight in Los Angeles. Games that were nominated include Resident Evil 4, Super Mario Bros. Wonder, and Viewfinder. Happy birthday, Sarah Bareilles, Larry Bird, Terrell Owens, Emily Browning, and Pete Alonso were also born on this day. On earnings today, we have Broadcom, Lululemon, and DocuSign, among many more. Now to the big story. Everything that glitters isn't gold, or so they want us to believe. Did you know that the Polish central bank is buying gold according to a secret European Union plan? The Polish central bank has bought roughly 300 tons of gold in recent years to bring its gold to GDP ratio in line with the average in the Eurozone. Now, didn't we hear it once said to us by a Fed chairman that the only reason why they do anything with gold is because it's tradition, not because gold is money? Interesting. For medium and large economies in the Eurozone, to which Poland might be included in the future, an equal monetary gold to GDP ratio is a covert requirement for nations to be prepared for a shift to a new gold standard. Based on these requirements, it's expected that Poland is to buy an additional 130 tons of gold. Now, for those that don't know, the idea in the European Union is that eventually all countries adopt the euro and become part of the Eurozone. At the time, the EU counts 27 countries, of which 20 form the Eurozone. When the remaining 7 countries will introduce the euro is unknown. Within the EU, most notably Poland, but also Hungary, has been a large buyer of gold in the past years. Poland and Hungary are not yet included in the Eurozone. Europe has been preparing a global gold standard since the 1970s. Dutch central bank admits it has prepared for a gold standard. This is irrefutable, that there are secret agreements between nations in the Eurozone to align gold reserves relative to GDP to be prepared for a new gold standard or gold pricing targeting system. For Poland to be included in the euro area, it has to match its gold to GDP ratio with the Eurozone average. On one hand, the arguments being referred to are secretive because some central banks in the Eurozone refuse to be transparent regarding gold reserve alignment on grounds of professional secrecy laws, such as Belgium. On the other hand, some of these central banks have spontaneously stated they determine the size of their bullion holdings based on the gold to GDP ratios of large economies in close proximity, such as the Netherlands. Of concern to our present, Poland is eligible for Eurozone inclusion that is buying large volumes of gold, which reaffirms the existence of the agreements. Not only are European central banks slowly revealing their gold strategy informally, all actions taken substantiate this policy. So the data shows EU central banks balance gold to GDP ratios. Last month, a representative of the Dutch Central Bank confessed in an interview that DNB holds gold worth about 4% of its GDP, which it has brought in line to the positions of France, Italy, and Germany. Bear in mind, the Eurozone does not control the price of gold and thus their gold to GDP ratios, but there is a desire to harmonize these ratios throughout the Eurozone. Now, supervision of total international reserves, gold and foreign exchange, versus GDP throughout the Eurozone is even higher. While European central banks have communicated that there are no legal obligations to coordinate reserves, they have likely agreed to recurrently use foreign exchange to equalize total reserves and be able to exactly balance gold reserves among each other the very day they shift to a new gold standard. Periodically, adjusting gold reserves is politically too sensitive. Again, this is not a game. They know what they're doing, and they're doing it in secret. Prior to 2017, Poland held 103 tons of monetary gold, which was just 1% of its GDP. To come on par with its European associates, Poland needed to raise its metal reserves significantly, and so it did. In 2018, the Polish central bank started buying gold aggressively, but now it holds 334 tons, which is nearly 3% of Poland's GDP. See the similarities there? As can be seen in the charts, Poland would need 450 tons to reach 4% of GDP, like its partners in the euro area. Additionally, NDP needs to transfer gold to the European Central Bank the moment it joins using the euro. According to the calculations, that would be about 16 tons at the prevailing gold price. In total, that's expected that they will buy another 130 tons. Could this be the reason that gold futures are pretty much staying steady above the 2000 line this time? Remember, traditionally, gold has a hard time staying above 1900 and even a harder time staying above 2000. In the 19th century, as more countries joined the classical gold standard, demand for gold went up. On a gold standard, upward pressure on a country's currency as a result from increased demand for gold created downward pressure on prices of goods and services denominated in that currency. Adoption of the gold standard involved deflationary forces. The more skewed the current global distribution of official gold reserves, the less smooth a transition toward an international monetary system based on gold. Consequently, for every central bank that holds gold as its plan B, which is a gold standard in and of itself, there is an incentive to convince other central banks to do the same and balance the size of their bullion hoards among each other proportionately. So when there is a severe financial crisis, which will fan out like wildfire in today's intertwined markets, countries can stabilize their economies by shifting to a stable global gold standard. The majority of central banks are aware of this dynamic. Next to Poland, Hungary has increased its gold reserves substantially from 3 tons in 2017, which was about 0.1% of GDP, to 94 tons in 2021, which is 3% of GDP. There we go with the magic 3%, 4% GDP, right? We keep seeing this occurrence, this trend. Tellingly, the Hungarian central bank commented that gold may play a stabilizing role and act as a major line of defense under extreme market conditions or in times of structural changes in the international financial system. Are you hearing this? The Czech Republic is also buying of late, though its gold to GDP ratio is still far below the regional average. I wouldn't be surprised if the Czechs buy an additional 150 tons in the years ahead. Now, these developments are not likely to be limited to Europe. China, too, is mindful of matching its official gold reserves to the size of its economy, according to research. The Chinese central bank currently owns 5,220 tons of gold, which is worth almost 2% of its GDP. Perhaps this explains why the People's Bank of China is buying gold hand over fist, approximately 700 tons annually. Since the West froze Russia's dollar assets, it needs to double its gold reserves and can't afford to wait. Now, a test case is Singapore, another large buyer of gold since 2021 and seemingly trying to catch up as well. In 2018, Singapore's monetary gold to GDP ratio was 1%. Now, guess what it is? You guessed it, it's now at 3%. It will be interesting to see if Singapore stops buying gold when it has reached 4% or whatever the average ratio in the Eurozone at any point in the future is. I'm telling you, folks, something is afoot. There is gold in them there hills. If central banks are rushing and falling over themselves to purchase gold, what should the average citizen be doing? ABS, ABS, ABS. Always be stacking. That is what you should be doing. I rest my case. This has been a wonderful piece. I hope I woke some people up with what's going on in this gold market, because I'm telling you, time is speeding up. And while it's speeding up, it's also running out. And if you don't do what you need to do, you may find yourself missing out. So I just want to throw that there for you so that you can understand what's going on. And this kind of gives a little bit of background as to what may be going on that supports the strengthening that we've been seeing, and along with the sustainability of the gold futures prices. So now you know. The next question is, what are you going to do about it? And with that being said, don't forget to smash that like button, share, subscribe, and all that good stuff, because the system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And you don't want to miss the next edition of the podcast, Thinking Outside the Box, where we have been going very deep and looking under the hood of the banking crisis that no one wants to talk about. but we're going to talk about it. So see us over there on Rumble around 11:30 a.m. Eastern Standard New York time. And with that, I'm out. Peace.